Good evening, good morning, good afternoon, wherever you are watching us from. We are glad that you are able to join us on this online conversation today. I'm truly delighted to have you. My name remains Comfort Eyitayo, your regular host for Connect with Comfort show. On this program, as we usually intimate you, we aim to add value to people on enterprise and personal growth. For each show, we try to feature special guests who are usually subject matter experts that helps us to throw more insight to the topic of the day. We are glad you're able to join us. This is a second part, as you would have noted, on the topic, a very current topic as that is trending, and that is understanding what the new tax laws mean in practical terms. We have had the first part 2 weeks back, and because of popular demand, and for us to conclude what we started, we are able to feature the second part today, still with the same guest. So at least those of you who were thinking some of your concerns were not covered, you are in a good position to ask all those burning questions that perhaps we were unable to answer in the first part. Our guest is ready for us, and we'll just go straight into the um, second part immediately after this time out. Please remain connected. We'll be right back to introduce our guest once again and then take it from there. Thank you. You are welcome to the show. Since, thank you very much for staying tuned. It's now time for us to welcome back our guest. Like I said, is the same guest that we had 2 weeks ago that gave us a lot of good insight on this very important topic. And I'm delighted. For those of you who were not able to join us, I will just give a brief remark about our guest, because we are trying to see how best we can save time to have enough time to do the needful. Our guest is Pastor Peter Adebayo, FCA. He is a seasoned practicing chartered accountant, tax and management consultant. He is currently the managing partner of Peter Adebayo and Co., a Lagos-based registered and ICANN licensed professional firm of accountants, of chartered accountants. He is a highly sought after versatile facilitator in the knowledge industry, a regular public speaker, paper presenter, and It features in so many high-profile training, management retreats, seminars, lectures, and workshops. Is also a national TV presenter. He appears in so many of our national TV programs where he also gives enough knowledge, share enough knowledge for people to be abreast of what is going on. So, without much ado, I want to welcome back our special guest for today. Like I said, we are trying to abridge everything so that we have enough time to go into the meat of the presentation. We are glad to have you back, Pastor Peter Adebayo, FCA. I'm glad to, we are not taking it for granted that you granted us the audience second time around. And we know that this session will not be less interesting than the first. In fact, there are so many clamor that we have to bring you back, and we accede to the yearning of our audience, and that's why we are here today. And thank you also for obliging. So you are welcome back. Please join me in welcoming back our special guest for today, Pastor Peter Adebayo, FCA.
But good afternoon. I want to say thank you once again, my beloved mommy, Ambassador Dr. Comfort Olu Jumoke Eyitayo, MNI, FCA, OON, for the privilege to be a part of this popular Connect with Comfort show, like I said, which continuously is gaining universal audience. Mommy, I want to commend you for doing a fantastic job on this show. Without having to waste time, distinguished participants.
Maybe I'll just tell them that for the benefit of those joining us today, and even for the benefit of those who were on the show 2 weeks ago, we want to have a small recap so that we'll be able to tie in where we stop to where we're starting today. And our special guest has so much obliged us to do this, to give us a brief recap of all the areas we examined in the first episode. So over to you, Pastor Adebayo.
Okay, thank you very much, man. So very briefly, let's look at a recap of what we discussed last week with emphasis on the new tax laws. The implementation began 1st of January 2026. The first aspect of our consideration last week had to do with the major highlights of the new tax framework. We said that the reforms focus on modernization as against a simply increasing rate that people imagine or assume, which includes the expansion of the tax base by capturing informal and underreported activities within the Nigerian business environment, which also include stronger enforcement through data matching and digital monitoring. The highlights also include increased reliance on direct and transaction-based taxes. We also talked about the clearer compliance responsibilities for individuals as well as SMEs under major highlights. We went ahead to look at why these reforms are happening now. And we said the changes are driven by 3 strategic priorities, which among others, we talked about. We looked at sustainable government revenue, of course, beyond our dependency on oil. We looked at formalization of economic activities. We also considered the digital transformation of tax administration. We concluded that by saying reforms represent structural modernization, not necessarily temporary policy tightening. We proceeded to the immediate impact of these reforms on the businesses, in this environment. And we said that businesses are most likely to experience effects in 3 operational areas, which include pricing adjustment, which is occasioned or due to indirect tax pressures, reduced margins for non-compliant entities and organizations. We also talked about greater pressure on cash flow, which is going to be due to earlier and the more consistent tax obligations. And we said that tax is now a real-time business cost and not just an obligation that we have to live until the year end. We left the impact and we moved straight to common transition risks for businesses, because we know that a transition of this nature is expected to naturally come with associated transitional risk. And the frequent compliance mistakes that we highlighted, during the first episode include assuming minimal change. What is happening in this tax reform goes beyond minimal change. We also looked at the delay in action until enforcement begins, which is a reactive approach as against being proactive. So you don't want to wait until enforcement begins before you think ahead of how you're going to navigate. We also looked at weak documentation systems, which is a very fundamental issue, that small businesses make. We looked at treating tax as solely the accountant's responsibility. So it's not supposed to be accountant's responsibility alone. It's supposed to be the responsibility of overall management. And of course, as part of the risk, we looked at the risk associated with mixing personal finances with business finances, which is predominant with the small and medium-sized enterprises. And we concluded that by saying most penalties arise from very poor systems and delayed response, which of course are not deliberate fraud activity. Now, from there, we moved to compliance for SMEs. Under this, we discussed the need to remain compliant. We grow. We admonish that we should focus on well-structured bookkeeping and documentation, understanding obligations, based on the size of the entity, with regards to the sector where they are operating. We also looked at the separation of personal and business finances, right, as a compliance priority for SME. And we looked at seeking early professional guidance. When you see professional guidance early, it also helps you to be able to at least identify issues ahead. We went ahead to look at impact on individuals, which among others had to do with a stronger pay and drug enforcement, reduced acceptance of unsupported deductions, closer alignment. That's between our lifestyle and our declared income. If your lifestyle does not have any correlation with your declared income, of course, you're going to be answering questions. You can't be telling me that you earn 500,000 on a monthly basis and you pay 10 million naira rent on a yearly basis in Banana Island. So lifestyle and declared income must be reconciled. Then greater responsibility for self-employed professionals is also another area to observe. Then, of course, we say personal income tax compliance is becoming more transparent and highly accountable. The last aspect of our discussion had to do with effective moving from reactive to proactive tax management. Here we have looked for effective tax management, requiring integrating of tax into every aspect of our decision making, strategically talking. And of course, we talk about forecasting tax liabilities at the point of budgeting, for the year ahead. And we also said effective tax management requires leveraging incentives in very legal perspective, and of course, periodic structural reviews, among a number of other things. And I think I'll take away from this reactive approach to proactive is that strategic tax planning is a competitive advantage that must be delivered by all and sundry within the Nigerian business environment. So that is a brief recap of what we talked about last week. Okay, 2 weeks ago.
Fantastic. You've actually captured everything. And just a matter of emphasis that proactiveness is the key word here. Instead of being reactive to avoid unnecessary penalty. That is very key. Another key word that he has reminded us of is proper documentation. Proper documentation. because that is the only proof you are going to have to support whatever you are putting out as figures or claims. And then for small businesses that we are all guilty of mixing personal finance with business finance, our our cash our cash is the same as that of the company. We have to desist from doing that straight away. We have to be able to separate the personal money from that of the business. Is very key. He has also reminded us of that. And then, of course, the compliance. Compliance is stricter now than before. So we have to be sure that we are not caught napping. There's no ignorance
Under
that
the
can be
law.
needed for any law. So you cannot say, oh, it's because I don't know. In fact, they probably tell you that even if you are deaf, you would have heard so much about this tax law because it's a sing song everywhere. So please let us be reminded of all these key things that we have pointed out, and they are very, very important. So we thank you very much, Pastor, for doing us proud on this recap.
My
The
pleasure.
essence of that is for us to annex it to the stage we are going to right now. So that's where we stop. That is true. Now, I will ask, how is technology changing compliance expectation in regard of this new tax law?
Wow, that's a very, very germane and important, that's very important question. Technology is one area that everyone needs to focus on. It's a tool that everybody must embrace, whether we like it or not. So, technology is actually going to change compliance expectations in different perspectives. So, tax authorities now, they expect more of digital records as against what we are used to, the manually driven ways of keeping our records, which means we must embrace digital literacy under the current dispensation. So that's a compliance expectation. Number two, real-time or near real-time reporting. Our reporting now must be so real-time online such that at every point in time, referencing can become easier. Information can become easier to access, real-time online. Now, traceability of transaction is also part of the compliance expectations, that technology is going to change. Of course, consistency between bank activity and our tax filings. Technology is also going to make that easier now because you can even see the issue of CIN, all these new registration procedures that will have technological integration. So these are areas that technological changing compliance I would expect to. So in a nutshell, manual systems will no longer be a defense under the new tax dispensation.
Thank you very much. The beauty of that, of course, is that there will be less stress for us if we can embrace this. In fact, we must embrace it. We don't have a choice because very soon, manual aspect will be a thing of the past. So to make sure that it's less stress-free for us to file our returns and then comply. Thank you very much for that response.
My pleasure.
What should organization begin to put in place now in view of what we have addressed?
Thank you very much for that question, Mommy. What should organizations begin to put in place in terms of what we have addressed? Fundamentally, every organization now that is in the business environment must be able to put in place basic accounting software. Basic accounting software that will drive seamless management and financial reporting that will aid decision making. Number two, there is need for digital document storage. Thank God for technology again is coming in now. It is an era now when everybody is embracing cloud computing. So as an organization, you must be able to put in place a digital documentation storage that will secure your document, irrespective of accident or something. Number three, it is also expected organizations should put effective internal control in place. Of course, we know internal control is a process of trying to achieve corporate objectives of an organization through operational efficiency, through reliable financial reporting, and through compliance with laws and regulations. So, to be able to achieve that, there is need for effective internal control mechanism that will be reviewed from time to time in line with dynamics of the business environment, in line with growth potentials of the organization, and in line with changes in the legal and policy framework of the organization, of the country. Then again, there is need to put in place staff awareness training and different dimensions of capacity building programs that will equip the personnel to be able to deliver and keep themselves abreast of what is happening within the business environment. Now, in a nutshell, technology is no longer optional. It has become an integral part of compliance under the new dispensation.
What are the practical actions you would recommend me for somebody listening now to do immediately after this session?
Well, immediately after this session, of course, part of why you have put this fantastic program is in place is for actions to follow. Those who are participating in this program, they expect that at the end of it all, what are they going to do? I will mention 3 practical actions to take immediately after this session is concluded. Number 1, there is need to undertake a review of your current tax situation, of your current tax position, objectively and honestly. It's just like having a personal self-assessment of myself to be able to know my strengths and weaknesses. So that where my weaknesses lie, I'll be able to pay attention to where my strength lies. I want to do that, make the best of it. So review your current tax position objectively and honestly. Number 2, I also want to advise that we fix all record keeping gaps. Where you have noticed gaps, there is need for us to fix them immediately after this program and strengthen your overall documentation system for efficiency and effectiveness. And of course, number 3 practical action to take will be engaging qualified tax or financial professionals as early as possible to guard against possible exposure. So delay is more expensive than advice under the present dispensation.
Okay, you mentioned when you were responding to the earlier question, talk of risk, how to manage or mitigate risk. So
Yes.
beyond penalties, are there reputational risk as well?
Of course, beyond penalties, definitely there are reputational risks, and I would say absolutely yes. Non-compliance can affect, what I call the bank financing borrowing ability, which may become impaired if we are tagged as a defaulter. So that can be a reputational risk factor. There is also the need for you to consider investors' confidence that may become eroded. So where investors' confidence is eroded, there is a risk attached to that phenomenon. Of course, another reputational risk area is access limitation. We call access limitation to government engagements. Being given government contracts. So if you are guilty, if you default, if you are exposed to penalties every now and then, I mean, confidence level about you in terms of getting engagements may become impaired. And of course, what I call brand trust may also become impaired, which means the trust imposed or imposed in your brand, may become impaired, which may hamper your business development drives and your business development initiatives. So tax reputation under the new dispensation should be seen now as a business credibility issue, not just a legal phenomenon.
Maybe you can add growth to that.
Growth,
For you to have growth in your business, you have to be trusted. So that element is very important. Thank you very much.
Very, very important. Thank
So
you.
we should actually, what that is saying to us is to make sure that we do not handle this with levity. We should make sure that our reputational, our reputation is intact and is not damaged in whatever way, from lack of compliance or being tagged as a defaulter or maybe
Or a victim of non-compliance.
So we have to be careful about that. Now, who should be concerned or most concerned about these changes, the changes we have analyzed earlier? Who should be concerned and why?
As a matter of fact, virtually everybody should be concerned. Well, I will mention briefly, those who are to be concerned more. If you fall within small and medium enterprises operating informally within this sector, within this economy, you should be most concerned with these changes that are taking place. Those who are operating informally as a small and medium enterprise or enterprises, you should be concerned. Then, of course, professionals like you and I, consultants like you and I, we should be more concerned because expectations about us are so high. People rely on us now. It's like within the scriptural environment, those who are not able to read Bible, they rely on those who are Bible readers to be able to know what the Bible says. So whatever they tell them dogmatically, they accept it. So in that vein, those of us who are professionals and consultants, we are also most concerned about these changes. And that's why we don't have a choice but to keep ourselves up to date, to be able to deliver expectations of our clients. Then, of course, fast-growing businesses are also most concerned about these changes. Then cash-heavy businesses are also concerned. Growth without structure will always attract attention and risk. I just feel like I should mention that. Are we together? Are you with me, ma'am? Hello? Hello? I guess there's is there a technical issue from your side, ma'am?
Being relevant in your field of occupation is proof that you are properly educated. When my parents and I were thinking about my university education, Owen University Iwo was our first choice.
We are back.
Yeah. Okay. Did you get my last comment?
About?
Yeah. Did you get my last comments? Who should be most concerned?
Yes.
Oh,
yes.
Okay.
We are talking of small businesses,
SMEs,
consultants like us, professionals.
Exactly. Fast-growing businesses.
But for the SMEs, I was just waiting for you to land. For the SMEs, we need to tell them why. The question is who and why.
Yes. Okay, who and why? Why should SMEs operating informally be concerned about these changes?
Yes.
So that they will not be vulnerable. Like you mentioned something. Right now, ignorance of the law can no longer be an excuse. So if you run SME as an SME operator and you have been operating informally, right now you cannot be doing things the same way and expecting a different result. I mean, Albert Einstein says so. Doing things the same way over and over and you're expecting a different result, he said it's the best definition of madness. So we can't afford to do things the same way we used to do them. Otherwise, we will be exposed to what is clearly avoidable. For professionals, look at somebody like you and I. Why must we be concerned? We need to be concerned so that we can deliver quality, up-to-date service that will meet the expectations of our clients. Of course, fast-growing businesses, you want to be able to know how the rate of growth in your business is affected by the new tax law so that you can be armed and prepared, towards coping with areas of changes. And of course, for cash-heavy businesses, you will need to know so that you'll be able to understand and appreciate the impact of the cash-heavy nature of your business, and that way you also not be on the right side of the law. So right, to help you to be able to know what you are supposed to do, what you do rightly, and what you are not doing that you ought to do in the most appropriate manner under the provisions of the law. So these are some of the reasons why it becomes important for us to be concerned if you fall within these categories of people in this sector.
Well said, well said. No doubt, we mentioned one of the reasons for, if I'm asking what's the cost of ignoring these reforms, because some people may still think, well, it will go away. It's not going away. So we need to consider the cost of ignoring the reforms. And one has been well said by our guest. One is reputational risk, which is fundamental, because if you want to grow, you have to be believable for people to want to transact any business with you. So that's one. Are there other costs for people who may choose to ignore this tax reform?
Well, thank you once again, ma, for that question. Again, that takes me back to this our Latin maxim also. Ignorantia is cluster, non fit injuria, meaning that ignorance of the law can never be an excuse. Any act of ignorance will be viewed from the point of non-compliance. And the cost of ignoring these reforms can be enormous. As a matter of fact, ignoring this can also cause reputational damage, which is a product of reputational risk when it manifests. So one of the various costs of ignoring these reforms can be imminent financial penalties and, of course, avoidable interest. They are avoidable. The best solution to an avoidable problem is avoidance ab initio. If it is not avoidable, it just comes suddenly. It is accidental. But being exposed to penalty or running into penalties is a product of statutory infraction or provisional infraction within the laws. So, and that will result into imminent financial penalties and interest. And that is going to be a cost, which, of course, at the point you are doing your budget, you won't be making budget for penalties and interest on a yearly basis, because nobody is going to be saying that in the course of this year, I plan to run into pit that will make me pay so much. So, imminent financial penalties and interest will be one of the costs of ignoring these reforms. Number two, there is a likelihood of business disruption. And when your business is disrupted, your revenue generation potential is most likely to be impacted. And that's going to come at a cost. Number three, lost opportunities. Opportunities once lost, you may never regain it. Once an opportunity is lost, there are attributable benefits, attributable revenues or income. Those ones, they will also be lost. And when you begin to put value on them, you know that, look, it is a cost I can actually avoid. Then, of course, stress and reputational damage. All of this put together, there are costs that can be incurred in the course of trying to ignore these reforms. And that's why we need to upgrade ourselves with a lot of enlightenment, with a lot of education. And that's why a forum of this nature is very, very important. So ignoring tax does not save you money. It only postpones imminent pain.
Thank you very much. And maybe those good examples that you have given, you can add quickly mental health issue. Because if you are seeing that one,
that's very fundamental. It's also very, very relevant.
It's fundamental to the business progress and everything. If your mental state is not intact, which can be part of this cost we are talking about. So it's not something that we should underplay at all. That's why we are assessing it. Thank you very much. So with this, what should be the very first financial habits people should adopt now with what we have said? If you want to recommend
the very first financial habit people should adopt now, I think fundamentally, I would recommend that you should record everything. If it is not documented, Yes, they do not
documentation.
exist for tax purposes. That should be the first financial habit that everyone should adopt
Definitely,
without any option.
definitely. Where are businesses most likely to lose money unnecessarily under this reform?
I'm very happy, man, that you qualified losing money and you said unnecessarily.
Unnecessarily.
Yes. You see, there are a number of places where businesses will lose money unnecessarily, and one of them has to be as simple as this one where I've just mentioned: pay penalties instead of planning. When you fail to plan, you definitely come with penalties. That's why people say failing to plan is the best definition of planning to fail. So anybody who fails to plan in terms of tax, who must be prepared to pay penalties. So, and when you are paying penalties, it is affecting your bottom line on one hand, and it's also impacting negatively on your cash flow as an organization. So you are losing both ways. Not only is it affecting your bottom line because it's going to unduly increase your cost of doing business that will reduce your profitability, and at the same time, the cash that you are using to pay that penalties would have been used for something else. So pay penalties instead of planning is an unnecessary way of losing money. Number two, overpaying due to poor classification. This is where more enlightenment is also essential. I mentioned the need for us to do capacity building for our personnel. So when you train your personnel appropriately, with update, with what they need to have knowledge, it makes it easier for them in the process of trying to do their financial recording to go with appropriate and the right classification. So when you have poor classification, it can result into payment. If you classify it wrongly, you will end up paying what you're not supposed to pay. Now, where do businesses lose money unnecessarily? Well, missing incentives. All right, there are certain incentives that you are supposed to pay attention to. If you don't pay attention to those incentives, you may be missing along the line. So the incentives are supposed to push the effect of what you're supposed to pay. If you miss those incentives, then of course it will cost you money and you have no choice but to pay honestly. What does that mean? It means you need to understand the various dimensions of incentives that are available that you can take as relief, that will help you to be on a better pedestal. And of course, inefficient cash flow management can also cause a business to lose money. If your cash flow management skill is very porous or very poor, the tendency is for you to lose money unnecessarily. So, in a nutshell, to say where the business lose money unnecessarily, I would just say poor structure is the most expensive cost if it is not given desired attention.
Thank you very much. So we need to have proper structure. Let's take this contribution from Taiwo Ojo from Abuja.
Okay.
The
All right.
question goes thus: how do we take the market traders, that is yam, tomato, pepper, and the likes, into consideration when we are discussing ignoring the new reforms, knowing their knowledge gap?
Well, this is a very important question. I
Very practical.
I got involved in something similar to this very recently. It will shock you to note the quantum of turnover that some of these people that we see as small businesses they make.
Traders.
I was shocked to review the transactions of certain category of people that if you ever think that they could bring out 300,000, you will say no. Only to discover that within a period of less than 7 months, you could have transactions running to have 1 billion. And the very first thing that comes to mind is I think these people need to be educated on how to handle their businesses. They need to be educated on the need for documentation of their financial transactions, including education about banking issues. So my answer is the market traders, the yam traders, the tomato traders, the pepper traders, and the likes. If you have knowledge of them, I think you need to look for a way of bringing them into consciousness of the implications of not doing what they ought to do under the present dispensation. Because for those of them who have bank accounts, you'll be amazed at the end of the day. By the time the turnover of your account is running to hundreds of millions, and you are saying you are an illiterate, the law is not going to recognize it. At that point in time, transactions will speak for you. So it is essential that those category of people are considered by way of getting them to be enlightened on what business processes and documentation procedures look like.
Thank you very much. I hope that addresses your point, Taiwo. So at what revenue stage should a business become more structured? Because this tie in with what we are just discussing about these petty traders. So at what revenue stage should the business start looking at formal structure?
Well, in my own opinion, the honest answer I'm going to give is earlier than most people think. Why? Because once you have registered, you have regular customers. Once you have regular customers, once you have staff, once you have personnel, once you have consistent cash flow. What I mean is consistent cash flow, which necessarily may not be in terms of volume. It becomes essential that at that point in time, you must become structured. So you need structure regardless of your size, which means whether you are a small size, whether you're a trader, whether you're a medium size, whether you're a large size, it is essential that you incorporate structure into your business model.
Thank you very much. So what should the CEOs begin to think differently about tax?
Chief executive officers, those of us who are here as CEOs, please listen and listen good. Tax should be seen as a strategic cost. Tax should be seen as a governance issue. You need to begin to look at tax administration in Nigeria. See yourself as a stakeholder. Tax should be seen as a board level decision and discussion that will warrant decisions at every point in time. So not a last minute compliance phenomenon. At every stage in the life of the business, as a CEO, you must see tax as a strategic cost, as a governance issue, and as a board level discussion, not a last minute compliance phenomenon.
Thank you. So what are the silent risks that many organizations overlook?
Silent risk that many organizations overlook. Well, again, he's taking us back to this. A silent risk that many organizations overlook, like even those smaller ones, is this poor documentation. Either poor documentation, inefficient, ineffective documentation system. It's a silent risk that most people don't pay attention to, which was why when you ask me a question, what should they start doing? Right now, record everything. Everything must be recorded, everything must be documented. Another silent risk that most organizations do overlook is staff handling tax without oversight. It is a major risk. Whoever is going to handle tax must have oversight. Whoever is going to handle tax, whoever is going to interface with tax matters must have tax literacy skills, at least in basic terms. Another silent risk the organizations are exposed to is inconsistent filings. Your filings must be consistent. Filings within the system, filings with revenue authorities, filings with statutory organizations. You must demonstrate a lot of consistency. So where your filings are inconsistent across different spectra, it becomes a major risk exposure. And of course, when this risk crystallizes, it's going to end up with unnecessary cost. It's coming in again, just like we discussed. And of course, over-reliance on a single individual can be a major silent risk, particularly within the personnel force. So don't rely on a major individual. Oh, it's the one that is handling it, or one individual. God forbid, anything can happen at a time that you least require his or her, input. What if you fall sick? God forbid. Nobody's going to die. We don't pray for die. Something can happen. Accidents can happen. So it is very essential. You don't play over reliance on one single individual handling your tax matters in the event that person is not going to be available. So a major control risk, a major control to mitigate that risk is to ensure that there is an alternative person that can handle what A is handling in the event that is not around. So silent risks are the most dangerous. Why did I say so? Because they grow unnoticed.
Thank you very much for that great insight. Now, this reform, in your own understanding, are they signaling a broader shift in the economic landscape?
Well, in my own opinion, I would just say yes. I would say yes. These reforms signal a broader economic shift. They signal a move towards transparency. They signal a move towards accountability. They signal a move towards probity. They signal a move. They signal a formal, data-driven economy. And they signal accountability over informality. So, which means informality now is going to be subsumed or replaced or displaced, as the case may be, by accountability. So, this is not just a phase, it is a direction, which every one of us, without any option, must be prepared to follow jealously, without any derailment, as the case may be.
Fantastic, fantastic. Let's go quickly through a rapid round. Just answering the question, just 1 minute question, kind of. What if you can think of one tax habit every business should develop? What should that be?
That one habit, like I mentioned, is record everything. I said that I record everything. Record everything as they occur. And as they occur, if they occur daily, record them daily. If they occur weekly, then of course record them weekly. That's immediately how it happens. If they occur monthly, record them. But in a nutshell, the tax habit that every business should develop is the habit of recording everything as they occur. It could be daily, it could be weekly, it could be monthly. Or record everything as they occur.
Thank you. What if you have to talk of a document? What one document no taxpayer should neglect?
One document no taxpayer should neglect: properly kept financial records, which include, among others, your receipts for all transactions, your invoices for all transactions, your bank statements for all transactions as your first line of defense. These are very germane financial records that no one can afford to neglect in business organizations.
Okay. One misconception about taxes you wish would disappear?
Well, one misconception about taxes that I wish would disappear. Well, I would rather say that tax is only a year-end problem. It is actually a daily business decision. So a lot of people see tax as a year-end problem, and I see that as an illusion.
When you are to file.
Exactly. So it's a misconception. It should actually be seen as a daily business decision. In a nutshell.
So you should factor it into your decision on daily basis.
On daily basis.
And look at the impact that it's likely to have.
Exactly.
That's why you rightly said it should be a strategic cost rather than looking at it as a.
That's exactly.
So what is that word that defines smart taxpayers to you? You want to say one word?
Well, that one word I can elaborate, right? But one word is what I will take from the Boy Scout slogan, and it's prepared. Or preparedness. Yes. Okay. Preparedness is that one word that defines smart taxpayers. Get yourself prepared. Or the word prepared. At every point, see yourself prepared.
Okay. Thank you very much. We have another contribution from Taiwo. We'll quickly take that because time is fast spent. What can also help most is to do all financial transactions through the bank and avoid or reduce drastically cash transaction. Very, very correct. Like we said, the digitalization aspect of the tax already underpins that there will be less cash transaction, and that's where it's moving towards. In the end, less, if not no transaction, cash transaction at all, as fewer
Exactly.
as possible cash transaction. That will definitely help. Thank you for that contribution, Taiwo.
I perfectly
So
agree with Taiwo. I agree with
yeah,
Taiwo.
sure, sure. Pastor, if there's one message you want every business owner and individuals that are listening to you now to remember after today, what would that be? Just short.
More message. The message I have for everyone to remember after today is that tax is not just about paying, it's about planning early, it's about staying visible, it's about protecting your future. It is an obligation and not a statutory consideration. It is to be seen as an obligation. Notable things that I want you to realize, like I mentioned the last, I said tax compliance is always cheaper than the cost of non-compliance correction. So the cost of honesty is always lower than the price of penalties. A compliant business will always sleep very well, whereas a non-compliant one will always pay dearly for it. So compliance should be seen as an investment, whereas penalties are expenses and they are clearly avoidable.
Thank you very much. We just had a quick contribution from Mr. Kola Olaiton, streaming from Lagos, which endorses Taiwo's position that business owners should at all times think of the tax implication of every transaction. And in fact, that's your own statement of
That's
every
correct.
transaction, that it should be a daily thing, not even a daily thing, transactional thing, because you can have a 10, 20 transaction in a day. It should be transactional thing than maybe weekly, daily, or monthly, as we have said. So that's correct, Mr. Ola. So thank you for that beautiful contribution. So let me just, on behalf of our team and our audience, once again appreciate our special guest for today, who has not disappointed. The first time is like we should have more than 1 hour to go on, and it's happening again. But thank God we're able to cover most areas that we were not able to touch last time, and I'm hoping that that would have made a lot of difference to us as business owners, individuals, in terms of knowledge of this new tax law. Thank you very much. While we
Thank you very much.
were while we were on it, while we were on the interview segment, we had some people join us. We had Oye. I didn't get the full name before the name disappeared on my screen. Oye, somebody joined us. We appreciate you. Taiwo Ojo, of course, who contributed, streaming from Abuja, joined us. Wendy Garuba Ayeni also joined us. I'm sure these names are familiar to you. They are colleagues.
Yes.
Ayeni Samuel Sunday from Ikorodu also joined us. Seeing a bit, is it a BT or something,
Okay.
that joined us. And Kola Olaiton also joined us. They are all our colleagues. We appreciate you all. We hope that we have made a difference in your knowledge base of this new tax law, and especially for those small businesses that are wondering how to go about it and survive this new tax regime, because everybody will now say the beginning of tax, the understanding of tax is the beginning of wisdom. so, so as a quick wrap up, because time is fast spent, is to appreciate all of you. Of course, our special guests, we are indebted to you for this great insight. We appreciate you
Thank
highly.
you very much, man. Thank you very
Uh,
much, man.
Tax awareness is now a critical leadership responsibility, as we have been told. Compliance is no longer optional; it's foundational. Early preparation reduces financial shock. Professional guidance is an investment. You don't have to have all the knowledge. If you don't have the knowledge, please reach out to consultants who can give you the knowledge or help you in areas where there are gaps. Don't look at the expense. It's not an expense. It should be seen and taken as investment. Then okay, we have Kubia. Kubia, I don't know the full name, but thank you for joining us. And perhaps most importantly, informed taxpayers make better financial decision because you'll be able to cover all your costs. You make sure that your margin is not
Eroded.
affected or eroded too much if it has to be affected at all. So it makes you a better financial planner and the decision maker. So it's important that we look at the import of what we are doing here to make you understand the rules, you reduce uncertainty, and where you need to get help, please do not shy away from getting help from the expert. So when you plan ahead, as our guests have told us, you protect your resources. It's very important. All these resources that we're saying you can lose needlessly will be avoided. And when you seek the right guidance from consultants, from friends, from those who are knowledgeable, you position yourself not just to survive, but to thrive. So let today not just be another simple conversation you listen to. Let us have it as a time we make our mind up to take the necessary action to become more financially informed, more proactive, and more strategic in our dealings. Let us remember, like I said before, knowledge is powerful, but it's only when you apply the knowledge. Thank you very much for joining us today. I will be right back next week with another important topic. As we go, we pray that God will keep us to that time. Goodbye and God bless.